Good morning, trading world. It is April 3rd, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. I got a lot to kind of rush through really quick because I'm very late this morning. This market is quite resilient. It seems the market wants to make April fools of us traders no matter what direction or side you are on. Coming into April, there are plenty of negative signs. However, there is a lot to fight through in order to actually go negative to a point where it would mean something. Remember, this is the first month. This is the first of the month, which means there are new fund flows, which kind of gives, which kind of gives money managers a little more ammunition to fight and keep this thing afloat, at least for the next 2 or 3 days. So we could find ourselves up for no valid reason. In my opinion, it seems we will go negative, but there will be some bullish pops that will shake things up and make you rethink your positions. Short-term time frames are all overbought, but in today's momentum-led market, that doesn't mean much. Right now, the monthly time frame is still looking to be bullish. However, the weekly is in its rest area or consolidation period. On the daily chart, it appears we are making a head and shoulders pattern right now. And we are forming that last shoulder at or around that 410 area. Or we're about to go create a new head soon, pushing us through that 413, 414 area soon. With the weekly chart where it is, to me, this could lead to a lot of trades getting chopped and whipsawed to death. In this environment, I would rather sell some longer dated premium, and if I am taking directional trades, I will be cutting my position size in half and looking for more confirmation on the direction from lower time frames. Let's get to, actually with this being the beginning of the month, let's go through the outlooks. The outlook for the month of April is bearish, closing below the 409.39 with a possible retracement down around 393 area. There is harmony between the technicals, which are bearish, and the quants, which are also bearish on the monthly. The outlook for the week is also bearish, closing below the 409.39 with a possible retracement down around the 401 area. There is harmony between the technicals, which is bearish, and the quants, which are also bearish. The 410 area and the 414 area are going to be key this month to let me know if another swing high is coming to form a new head in the head and shoulder pattern building, or the shoulder forming we're in now to announce the next swing low. That brings us to the key levels of the day. And actually, before I do that, let me go back and show you on the daily time frame. As you can see, it looks like a shoulder formed here. This could possibly be the head, and we're about to form that last shoulder here. That could quite well be the case. Or if we pop up here above this 414 415, 416 area, we would likely be looking at forming a new head. And so this would be the area of the likely next shoulder after we get done with this head, which kind of makes sense to me, being that there's going to be a lot of sideways chop for a while before we can actually break lower. I could kind of see us forming that head, pushing just a little bit lower, enough to kind of keep everyone on edge, and then coming back later, forming that new shoulder before actually going off or much lower in that August-September time period. So that is kind of a much forward view or look that I'm starting to form now. Let's get to the levels, key levels to watch for today. Alright, here we are with the key levels of the day. Starting on our resistance side, this 409.14 area is going to be really tough today. I expect rejection off of this area, as we've already had it. Then that is our Jack resistance area. Then our Queen resistance area is going to be the 411 to the 413 area. King resistance 414 to the 416 area. I don't really expect to see much of these two today, but it's something that could come into play later in the week, possibly on a Wednesday or a Friday. On the support side, we have our Jack support at 408 to the 407 area, Queen support 406 to the 405 area, and then King support 403 to the 400 area. The main thesis for today is bearish, closing below the 409.39 with a projected target low of between 408 and 403. The alternate thesis is bullish, closing above the 409.39 with a projected target high between 409 and 416. The main channel we're in is from 397 up to 416. The main channel below is 397 down to 379. We should also be aware of the main channel above where we are right now at 416 up to 425. Last week, market strength and breadth gapped up and played range bound in its upper range area. I expect strength to open weaker and consolidate for a while, building strength for the next move. We have harmony between the technical side, which is bearish, and the quant side, which is bearish. The futures also have a bearish bias for the day, with harmony between the technical side, bearish, and the quant side, which is also bearish. The weekly and monthly time frames are most important, and it's hard for me to see us breaking the 397 area to change the trajectory of the weekly time frame this quick. It's coming. It just may take a while for it to actually break things to go lower. That brings us into the scenarios of the day. Alright, here we are with the first scenario of the day, which is going to be our range day structure. We could begin the day at the upper end of an exhaustion consolidation pattern, trying to gather energy to continue, but fading back to the near support. That's going to be that 408, 407 area, maybe down to the 406 area. That is our range day type structure. Alright, our next most probable scenario is going to be our rounded reversal day type structure. We can get a continued push lower toward the jack or queen support area, find midday chop around either the queen or king support before going back up with the same energy or force we went down with the first part of the day. I'd also like to make you aware of the vice versa alert, which would be as follows. We would get a continued push up through the cash open, find our midday chop around either the jack or most likely queen resistance area, and then go back down the second part of the day with the same amount of force that we went up with the first part of the day. That is the vice versa alert on our rounded reversal day type structure. Alright, our last scenario is going to be our trend day down day type structure, meaning we open, gap down, and start with a pushback toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area, and usually we see the second half of the day start off looking to continue the primary trend of the morning, but usually turns into a head fake. And at some point in time, if it's a trend day down day type structure, we usually start to reverse in somewhat small rally at some point headed into the close. So those are the scenarios that I'm looking for right now. But for me, this is going to be a very confusing month, only because of the where we are on the larger time frames. With one still looking to push higher, having a positive momentum on the bearish side of the spectrum, meaning the overall trend is down, but we're getting positive momentum and still trying to push up. And then with the weekly being in its rest area or consolidation phase, with that, you just never know what you're going to get. So that's reason enough for me to step back and decrease the size and positioning and just try to make it through the month by selling longer dated premium, selling some calls right here and things of that nature, but nothing really going too heavy or too hard directionally, over especially nothing going more than a day or two. So that's where I stand. I hope this helps. And it's crazy right now because there's a lot of negativeness in the charts that I see right now, but there's just something telling me right now I just can't trust it. So I hope this helps. And as I say always, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position that we take and managing that risk in accordance to our account size. And going a step further is not just the risk in positions that we're in, but it's also assessing the risk in the situations that we're in, whether to actually go full size or not. So that's the opening bell. As you can see, I'm very late. But again, wishing you a positive trading day. Let's go out and have a great one. Don't be surprised if this is a flat day, a flat to up day for some reason. Like I said, it's new fund flows. There's a lot of ammunition for professional money managers at hand today to try to fight and keep this market up at the moment.